Hey, welcome back. Following the Bitcoin halving event early this year that brought down the new daily supply of Bitcoins from 900 to 450 and the ongoing challenges to cover Bitcoin mining infrastructure costs and the need to identify new income revenue streams and to diversify their business models, but yet with access to cheap energy resources, could AI indeed be the answer to achieve this? And finally, how would this impact to me as a Bitcoin Nvidia investor? Well, let's check this out in a little bit more detail. I want to actually discuss, before I delve into this, what is high performance computing. It's the acronym HPC you see here. I just want to set the stone as to what it actually means. It's really, as it says in this article, is the ability to process data and perform complex calculations at high speed, right? And what are the constituent elements of an HPC? Well, it has three main components, as you see here, right? In order for the HPC provider to work, it has to have these three components. It has to have the compute servers, the network, and storage. Okay, well, let's go back to the other article. So taking this into perspective, this article from Needham and Company, this is like a major asset manager, an investment bank, and really they've done an interesting analysis, right, as to the HPC and how Bitcoin mining companies could benefit this technology to help diversify their core business, which is Bitcoin mining, right? Because as I said earlier on, they are struggling to maintain. To remain competitive, and given the fact, as I said before, that there is a halving that took place earlier this year that kind of reduced their daily supply of mining new Bitcoins from 900 to 450, they're under pressure to remain profitable as a business. So this HPC could be an answer, and also there is an element of AI which I'll talk into it, right? So as it says here, the high performance computing infrastructure for artificial intelligence does provide a growing business opportunity for Bitcoin miners. And given the fact that if you go through here, what could be one of the obstacles for them to achieve this? Well, as with any new technology investment, it really requires a large capital expenditure. Because as I said before, for the HPC, you need to have the compute power server, the network, and the storage. Well, these components, some of the existing components in the Bitcoin mining, which is predominantly ASICs, right, cannot be reused. So they actually have to, start off with a brand new capital expenditure from scratch in order for them to migrate or diversify indeed into the HPC infrastructure, right? So most of the existing infrastructure, as I said, will need to be rebuilt to support HPC operations purely because it's not backward compatible with their ASICs infrastructure, which they traditionally use for their Bitcoin mining, as it says here. I'll give a little bit more detail as to how much of that capital outlay would consist of for these Bitcoin miners. Well, for these HPC data centers, they do require an investment of $8 to $10 million per megawatt in capex expenditure, and this actually excludes the purchasing of GPU chips, the AI chips from the likes of Nvidia, in order to support them with this migration. At the moment today, the Bitcoin mining companies cost typically oscillate between $300,000 to $800,000 per megawatt, including their ASIC. So you can see is almost it would require a 10x fold in order for them to purchase HPC equipment, right? Let's move on as to what this says here. So the Bitcoin miners venturing into AI, as it says here, are predominantly acquiring GPUs, typically the H100. This is like one of the early Hopper Nvidia AI chips. Looking at purchasing these type of chips, and also they're looking into collating them into a third party as a quick entry into this HPC space, so as not to disrupt their existing ASICs infrastructure capacity. And this could also be a less capex intensive way to generate the AI revenue, right? So there is two options here for Bitcoin mining companies to prosper. This is to first either perform outright purchase of the AI GPU chips in their own data centers. So it's outright ownership, or indeed strike a co-location agreement with a third-party provider that already have GPUs in their data centers, right? Which would negate for the Bitcoin miners to actually fork out the capex to purchase their own chips. So those are the two ways that I'm seeing for them to be able to prosper and diversify their business to AI space through this, right? But needless to say, I mean, having said these are the kind of the challenges that they have. But needless to say, this asset manager, thoroughly believe this is advantageous for the mid to long run for miners, right? To move into the space, and particularly to own their own data centers to support HPC. Purely because, as I said earlier on, they already have access to cheap power. So in itself, they don't really need to rely on third parties sites for GPU co-location for HPC business to ramp up. They already have that advantage, right? So there's no need for them to co-locate that at all. So they really should be striving for their own investments in their own data centers, based on the access to the cheap energy supply that they already have. And it says here as well, large publicly traded Bitcoin miners are already planning to double their power capacity over the next 12 to 14 months, inclusive of their own mining and AI HPC expansion plans, right? So this in itself is evidence that this is where the wind is turning, right, for the existing Bitcoin mining companies. They already are investing to expand their business to retrofit the HPC component to their business, right? So this is very good news, right? Despite of the challenges I mentioned earlier on, this is very good news for Bitcoin and any AI stock investor, which is whether it's Nvidia or AMD, Intel, and so on. Okay, and just to round this off, if I go a little bit further down the report, there's other competitors, right? So you've got Applied Digital, another Bitcoin miner company. Again, they've expressed ambitious plans, to move into this space, right? And also Marathon Digital, which is another major player, another mining company. Bit Digital has become the first cloud service platform manager to offer NVIDIA DigiShares for H1. Okay, so really, if you go through this article, I mean, it's very conclusive, right? There is already a manifestation or expressed interest from a handful of Bitcoin miners recognizing the fact that they need to do something. They need to move away from their core business of generating Bitcoins, and based on this halving pressure, they need to do something to diversify away, not away from that completely, but into another area, which is HPC. So this is like this is the trend that is moving, right? And this is very, very positive news. How would this impact to me as a Bitcoin NVIDIA investor? Well, from a Bitcoin perspective, this is very good news, because the Bitcoin miners that exist today, they are starting to sell off some of their Bitcoin reserves in their treasury to cover their costs. So you might have seen there is recently a sales pressure, and part the answer to that could be because of the fact that these Bitcoin miners are finding it difficult to cover their own costs, right? So the one way to mitigate that is to start investing into HPC, right? Given the cheap energy supply, and they can actually generate additional income stream without having to sell their existing generated Bitcoins as a result. So this is a very good news for me as a Bitcoin investor. From an NVIDIA investor perspective, this is positive, because since many Bitcoin miners recognize the fact they need to move away, they need to invest, right? If they want to cover the HPC data centers linked to their energy supply from their own companies, they will need to put in massive amounts of capex outlays into this. So the AI industry in its entirety can only benefit in terms of selling a new raft of GPU chips in order to service that demand. And taking the fact that the AI industry at the moment is already supply constrained, okay, And for me as an NVIDIA investor, since the majority of the data center revenues, at least from an NVIDIA perspective, is 80%, right? So this is going to be, NVIDIA is going to continue to be the main beneficiary of these new orders for GPU AI chips to be sent over to these Bitcoin mining companies in order to help them set up new HPC data center infrastructure. So this is very positive. So I would suggest going through this article. I can share the link in the comment section, but this is going to be very good news. I wouldn't expect this to be impacting in the immediate short term, precisely because of the reason I've just mentioned. It's going to take some time for the Bitcoin mining companies to start, materializing their capex expenditure to buy these GPU chips, and to also set the stage for creating their own HPC data center infrastructure. Right, that's going to take some time. But the orders for the GPU chips from NVIDIA, it could be into short to medium term. So again, this can only push up even more the price of NVIDIA stock price. Thank you. Okay, so this wraps up today's episode. Hopefully you found this interesting, and it gives you that extra confidence that really investing in Bitcoin and also AI chip generating companies. I really do see this as a perfect marriage, as I put it in its title. I do genuinely believe that it's going to happen and be the case. It's not going to be, in terms of its impact and effect, it won't be immediate, as I've explained earlier, but certainly into the mid to long term, this is going to become de facto and the norm. So if you enjoyed today's episode, please do hit the like button on this video and subscribe to this channel, because by doing that, I can actually start generating some more useful content in my channel. So thank you very much.